how to identify monowave in Elliott wave and trade them profitably, guys. All right, so in this video, guys, we're going to explain to you how to identify monowave in Elliott wave. You see, 95% of traders that fails with Elliott wave because they jump straight into complex counts, without mastering the building blocks that makes it all work. The secret is identifying a monowave. Because if you ever struggle with Elliott wave, this video will open your eyes. By the end of this video, guys, you will know exactly how to identify a monowave, and trade them with confidence and avoid the mistakes that confuses most traders. What is a monowave, guys? A monowave is a wave within other waves. All right, so take for instance, let's just be practical in this video. No sugarcoating anything, just straight to the point. This is a BTC chart 4 hours. Now we have this impulse that moves up here, then after which impulse the market corrects himself here, and then he moves up again, he corrects himself here, he moves up again. Assuming when you enter this market, the market is just somewhere here. When you saw this market, the market is just somewhere here. What is a monowave here? Believe you me, you can see that the first wave that the market have here is this, and you can draw this line here, identifying this. You drew this. So this is a wave. This is a monowave of its own. This is a monowave of its own. Okay, so the most important thing to know is that a monowave is a single wave in other waves, and the easiest form to identify this monowave is to use a trend. Okay, to use a trend line to identify this. So permit me to put a trend line here. If I should zoom in here, pick my trend, drop it here to this. Now this is the first wave that actually formed in this market. The first ever wave that forms is this. And what happened? The market broke it here. Now anytime the market breaks a trend, okay, it shows that the monowave has ended, that is forming another wave. And that is why you need to put your trend here, because this is a wave within wave. Okay, so what happened again here? The market actually breaks the trend again here. So what happened? This is considered what? A wave on its own. And then we were expecting the market to create the second wave after he has finished what? The consolidation. So the connecting point between two waves is the consolidation, and this consolidation creates patterns. And that's why if you have not watched other videos that we have different patterns, we have explained different patterns for you guys: the running flat, the expanding flat, the regular flat, the contracting flat. Kindly watch that, and that will help you to begin to understand what forms of pattern we are looking at for in these places, guys. Okay, so as we're saying, the essence of this video today is identifying a monowave. So within here now we have what? A wave, a 2-wave, 3-wave, 4-wave, and after which now the market what? Has broken this. So automatically we are counting this to be what? One single wave. All right. So then you can now put this trend from here to there. You can put this trend from here to there. So then the market broke this trend at this point. So what happens? For all this market now, all this move here is considered what? A single wave. So a monowave is seen as a single wave within other waves. Now, if you start seeing market this way, two things will happen to you. Number one, you start identifying the impulses of the market, because the essence is this: once you're able to identify a single wave, you will know definitely with accuracy that you're expecting a correction, and after which the next wave will form. And based on this wave, how big this wave is will determine the stretch of the second wave. Okay, the stretch of the second wave. All right, and that is why we use Fibonacci to measure the first impulse, then we can gauge the second wave. All right, so that's how it is. Then we go down to smaller time frame, like 1 hour. You start seeing that this, you can trade this, exit at this point, trade this, exit at this point, trade this, also exit at this point. Now we are in 4 hours. You can trade all this, exit at this point. Then when this is over, also you find out that you can also trade the next second wave that will be forming. You can see the second wave and how it's actually formed. You see, the second wave keep forming and to this point. So now look at the current scene of the market. Now look at what actually is going on in the market. Now the market has actually broken this trend. So what does it tells you as a wave trader? Because the market has actually closed here outside this trend, so it tells us with accuracy that everything with this in this side is what? A mono wave, a one wave. And one thing we're expecting based on where the market is in a bigger picture, is it will be an indication for the market to keep pushing lower, or the market to give us a consolidation here to keep pushing high. But from all indication, from monthly chart, weekly chart, daily chart, we can see that if this market closes below this, which it has done now, then there is a tendency that BTC will start dropping from here. All right, and that is what we have forecasted. Okay, so that is one thing you should pay attention to. All right, so for you to identify a mono wave, you need to first of all ask yourself, what kind of trader are you? For instance, look at what is going on here. Let's do some analysis, and as I show you the thought process on how we trade most markets. Now, last 2 weeks when we are here, and I told you guys, if you've been watching our video, that this market is going to drop. Why did we make that focus? It's as a result of we've seen that this is a mono wave on its own, this is another wave on its own, this is another wave on its own, and this is another wave on its own. Okay, so if you draw your trend like this, it breaks here. So we know that when we see this kind of stuff, this sharp move and sharp move is an indication of a pattern that we recognize, and this pattern will not be completed except we will see the next wave. So this impulse here is equivalent to this first impulse, and that is why we know with all indication that this is a complete structure, and from here we'll be expecting the market to keep giving us what? Another move. And this move also, you can see they are also what? In 5 waves. So this is a mono wave. The market breaks here. This is another wave. There's another mono wave. This is another wave. This is another mono wave. This is another wave. This is another mono wave. So for you not to confuse you, we are always looking out for 3 waves to 5 waves. Okay, 5, 1, 2, 3, 4, 5. After which you expect 3 to keep pushing high again. So this is the standard of every Elliott wave. Now we have the 5 move in the direction of the trend, 3 move against the trend, 5 move in the direction of the trend, 3 move against the trend, 5 move in the direction of the trend, 3 move against the trend. So this is the basics, and this is the starting point for you being a profitable trader, and for you to stop reacting and being confused. So anytime we see a trade, we took this sell at this point, all because we're able to identify impulse correction, impulse correction, impulse. I think this is a very good example. So the bigger question will be, if you count this one to be 1, why did you consider this to be 2, and this 3, and this 4, and this 5? Now, if you know Elliott's wave and how to count your wave, you find out that if I should put my trend here, so the secret of identifying a mono wave is to use a trend line. Put my trend from this point to this point. What happens? What happens? So the secret is this: if the trend is not broken, guys, it is considered a mono wave. All right, so that tells us that if this market didn't break this trend at this point, all these moves is considered what? One mono wave. One mono wave. Pay attention, guys, because this is the bulk of this video. This is the essence of this. If you understand this, you stop panicking. Okay, so how do we calculate this? We have this 1 wave, 2 wave, all these are 3 wave. We have the 4th wave, the 5th wave. This is how to label Elliott wave profitably. Okay, so you don't need to just rush to label your charts. You first of all wait for the market to form the pattern that you recognize, and from there you'll be able to label. And the only way to do that profitably is to follow the market with your trend. Okay, as the market is breaking the highs, you are drawing your trend along, and you're waiting for the market to retest that trend, prove that this is a mono wave or not the monowave. Okay, so that's why we have this is 1, 2, 3, 4, 5, and that was why we took a sell here, because you know this is a complete structure of its own and we're expecting the market to drop as a monowave. All right, so and now remember this is a monowave, and also this is another monowave on its own, this is another monowave on its own. Okay, and this monowave also completes the bigger picture from down upwards, and then we are having another wave that is forming. Don't get confused, this is how the market is. So looking at the current scene here, what can you see? What can you see? You see that the market actually is dropping. Market has given us this impulse down, a sharp move, a sharp down. If you have drawn your trend like this would have been a monowave. Okay, this would have been a monowave. Let me use a standard trend that is straightforward. So you see that. So you put a trend from here, you draw here. So this is a monowave on its own. So you pick it up again because it has broken this low. You drop at this point. So we have a monowave. So all this move here, all this move are considered one until otherwise this trend is broken. So when this trend is broken, guys, you watch out for a confirmation that tells you that, okay, either the market want to keep pushing high or keep pushing low. So that is just how it is. So as the market is forming, now if you go down to smaller time frame, you can start seeing wave within wave in between these guys. All right, and this helps you to then separate the impulses from the correction. Now, for some of us that, so some of you, all right, so for some of you that be watching this video for the first time, it might be a little bit confused. What is this guy talking about? Now, to summarize this whole thing that we're talking about, the essence of it is to identify an impulse, and after an impulse forms, you know a correction, and when the correction completes, you'll be expecting the next impulse. All right, so most traders, they make two great mistakes because they label every small zigzag as a monowave. Okay, this is a zigzag form as a monowave now, and this create noise, all because they don't know where the market started. So if you want to draw your trend, and you need to start from the beginning of that move, drawing is to where the market is at the moment. Okay, so and that will help you not to ignore the fluctuating nature of the market. The fluctuating nature of the market, which is the key, the main key in identifying a monowave. Because if let me go down to 15 minutes here, and let's just see what actually happens here. Go down to 15 minutes. Even though that in a bigger time frame, this is a sharp move down, here in a small time frame, we're seeing wave within wave. Let's just take it further. Let's go down to 5 minutes. I want to just illustrate something for you in 5 minutes. Now, this will interest you. In 5 minutes, guys, look at something that is very, very interesting here. In 5 minutes, we have the market makes an impulse down, a correction move, an impulse down. All right, so this is a wave on its own. Now it gives you this impulse up here, correction impulse. This is another wave on its own, and at the end the market is giving us this what, another wave on its own. So your job as a trader, if you have this impulse, you look for a correction to trade the next impulse. You have this impulse down here, you look for a correction to trade the next impulse. Okay, you have this impulse, you look for a correction to trade the next impulse. Okay, so that is why you need to pay attention to identifying a monowave, because if you don't know the one that is monowave, you wouldn't know when that monowave is ended and when the corrective phase also is ended, so you can trade the next impulse. All right, so in a summary, you see an impulse, wait for a correction to trade the next impulse. So this first impulse is a monowave, this corrective move is a monowave when it's ended, and this last impulse is a monowave. But at the time everything will be completed, it will also be what? A monowave on its own. I believe this video helps. Now, if you want to trade this way, if you want to take the guess out of your trading career, you want to trade with precision, identifying monowave or learning how to trade with monowave, we're here for you guys. Okay, if you want to learn, kindly contact us and I'll be glad to help you. Don't forget to subscribe, don't forget to like, and follow us for more. Thank you.